Hi guys, welcome to the Next Wave Trading. My name is Sue, and today I'm going to be giving you 5 rules for day trading. So the first tip that I'm going to give you is to write everything down. So that means having a trading plan where you're going to write your entries, you're going to write your exits, and your stops. That's going to help you keep track of everything that you have done and to see what has worked and what has not worked for you, so you can repeat or you can modify your strategy.
Writing everything will also help you develop a plan, a market plan. What this means is the planning will give you a better idea on your strategies. This will also give you an advantage. As they say, it's better to be prepared than to miss the opportunities. Remember that the market is constantly changing. Having your notes will help you determine and keep track of all of these changes. Days may not be the same, but strategies might still work. Having everything in writing will allow you to modify your strategies instead of having to think of new ones. This will start developing your thinking and flexibility when it comes to adapting your plans. Remember that having everything in writing will help, especially for trading beginners. Having confirmation of your entries will allow us to lower the risks. Sometimes, the best plan is not to trade, but to keep track. Once you have seen a pattern that you feel comfortable, you can start trading.
So the rule number 2 will be for you to verify the news. Check what's happening before you start trading, because you never know what's going to happen. You never know who's going to talk. So before you do anything, you have to verify what are the news that day that you're going to start trading.
It's really important to check every news outlet before we start, especially when we are beginners. The market can be really volatile within the first hours. And if we're not well prepared, we might not be able to recognize the patterns and make a bad trade. You can check the latest events affecting the market or the latest stock market situation. You can also review the past performances. This will help you evaluate present and future situations. Also, you can make your research and check the best times to trade, either by personal experience or by checking the market at all times. Remember that discipline is required for hours, days, and weeks. Being well prepared will help you avoid simple mistakes. Be patient. Trading constantly requires patience.
So my next tip will be tip number 3, will be for you to get away from your computer if your emotions are kicking in. I do know and I have experienced that when you get frustrated, when you get angry, when things don't go the way you want to, that would be the best option for you to stop. Take some time out of the computer, go outside, read a book, do whatever you have to do, but stop trading, because your emotions might affect what you do next in your trading.
It's not you that trading might make you lose your cool. We all have had that time where the stock market tests our nerves. Remember that your decisions should be based on logic and not your emotions. Taking decisions based on emotions might lead you to make negative actions. Make sure you give yourself some time to understand and chill your emotions. It's easy to make money, but it's easier to lose it if you're not focused and if your emotions kick in. It might be possible that you lose more than you win, and we don't want that to happen. Creating a plan can also help you detach your emotions. If you have a trading plan, you'll be able to measure your steps, and it will give you guidance on when to step away if necessary. Also, if you want to use rule number 2, avoid the market when it opens, so you don't invest your emotions in volatile information.
So my next rule will be rule number 4, and this will come in hand with rule number 2. We don't have to start trading when the market opens. We need to wait a little bit so we know what's happening with the news and we can give it some time to the market. So we have to give it some time so the market can take its own direction. So we're gonna avoid trading once it's open. We're gonna give it some time, okay? So this is gonna be a tip if you want to. The best hour that you can start trading will be 15 GMT. So we have already given it some time so it can take its own direction. So the next rule will be rule number 5. We have to be realistic about the market. We know that the market changes a lot, so don't go in with high expectations. We still need to analyze what's happening and see how it's gonna work out that day. So just be realistic about that.
Remember that the strategy that you choose will not always give you the results that you want. But that's the beauty of trading. You have to find your balance. You need to know how to control your risks. Taking a loss is part of daily trading. That's why it's important to understand how to handle losses. That will make a difference when wanting to become a successful trader. Don't go in expecting to win all the time. Go in with a goal and real expectations. Not everything is about winning, and also not everything is about losing. There is a famous quote by Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget about rule number 1. Practice makes perfect. Keep practicing and setting small goals to get familiarized with the market and with your emotions. This will help you in the long run.
Alright, so my last rule will be for you to analyze what you have to lose and what you have to win. So if you have already reached the point that you wanted with your wins, stop there. And when you have already met the amount that you had established yourself that you could lose, stop right there. So you have to prioritize that as well, so you don't go over the edge and start without a strategy.
It's really important not to risk too much in trading. Remember that establishing the amount that you're willing to risk in each trade will give you plenty of room to trade, but also will give you a stop if things don't go the way you want. You can establish a goal, but this may or may not happen, and that's okay as long as you respect your amounts. As a beginner, I would recommend to start with a few trades. This will make it easier for tracking and finding opportunities, and will give you the chance to practice without losing that much. If you follow the previous rules, you'll see that you will find it easier because you have already developed a trading strategy and created a discipline to follow them. This is all about practice and know-how. Professional traders are able to create and modify strategies based on logic, experience, and patterns.
So if you found these rules helpful, let us know in the comments down below. You remember that you can subscribe, you can like, and you can activate your notifications so you don't miss any of our videos. Bye.